Monday, November 7th, market analysis, Stan Ehrlich. As I always do, I start out with the S&P 500, the spider in particular, the ETF for the S&P. And I was a little confused on Friday. I expected the market to break down and close lower than Thursday's low and start to sink quite a bit this week. That could still happen if we do close below Thursday's low of last week. I'm not sure that's going to happen at the moment. I can't really come up with a great combination of statements that would cause me to believe that's going to happen. In fact, we're going to be looking a little bit at the indexes separately because they get different pictures. Usually they don't. Here on Thursday, we came down to the neckline of the head and shoulder top that was built during October with the October lows, of course. I started talking about the October lows in 2 months earlier in August and September, day by day. And when it finally happened, I screamed bloody murder that this was the October lows, probably. It sure was. So it tested the neckline, although it got below it a little bit. The closing price is the last say, and it managed to close a squeak above the neckline. All day Friday, the market is trading at or above the neckline, and that's normal for a bounce off of the neckline. In a bull move, that is supposed to take me up to 403 to 410 maybe. I've been talking about that for several days from the original breakout level, which was October 24th. So I think that that's still possible if this market can start to close above yesterday's high. So it needs to do that, close above yesterday's high to perpetuate the bullish expectations. Otherwise, getting below Friday's low, especially Thursday's low, which is a new low for a couple of weeks, would not only break below the neckline, but it would also break previous lows and start a bearish swing developing, which could be critically important. And that's basically what I've been expecting from a long-term standpoint, because I don't think the long-term bear market's over. I still have a downside objective of 320, and I'm thinking it's going to be late February, March, something in that time frame as to when we get there. I'll scream bloody murder like I did October 13th if I can pinpoint the bottom of the bear market. Luckily, I was able to pinpoint the top of the bear market at the very beginning of the year for most indexes. The QQQ topped out, I think, in November 28th, I think was the date. Anyway, so I am not expecting a bull move. If you're looking at the spider, even though it bounced off the neckline and is holding with an inside trading range so far today, no higher high, no lower low. Let's look again at the DIA for a moment. The daily data on the DIA shows me that we had last week two very profound, usually bearish ER sell signals, and they're red. And that was on Monday the 1st, and that's Tuesday, the 1st, and November 2nd, Wednesday, both bearish engulfings. We're back up to where we coulda, woulda, shoulda sold short the little red dots. And this is the place to sell short on the DIA. The fail-safe buy stop is just above the high of last Tuesday, the high of the rally before the reversal, and it's on the reversal day. And a confirmation that we're going to see lower levels would be closing below last Thursday's low, like I mentioned on the S&P as well. But the DIA had a double bottom, not an official bullish engulfing on October 13th, but very close. Never got oversold, so I can't draw a green line there. It's white and green like a barber pole, except they're red and white. Anyway, white and green. And the double bottom produced a minimum upside objective of approximately 322 even, which it has reached and surpassed. So it's over. The double bottom worked. Then we got some bearish signals here. So I flat out, I'm looking for a move back down in the DIA. Plus, there's a small gap here at 311.50 that should be closed. Gaps are almost always closed. Well, okay, that's it for the DIA. And now the QQQs have ruined the previous head and shoulder bottom. And that was closing below that line on Thursday, and all day Friday, on Wednesday, of last week, closing below the neckline. All day Thursday last week, it was below the neckline, which is a definite no-no for head and shoulder patterns and how they're supposed to work. And we almost made a new low for the whole damn year on Friday, but it bounced back. People are going to look at this and say, oh, maybe double bottom formation. October 13th and last Friday for the two lows. Well, it was a bullish engulfing after a downside gap. So one might say that it's a downside exhaustion gap. We tested previous historical lows, bounced off of those levels in the general sense, and had a bullish engulfing. And today, so far, it hasn't violated any rules, bullish or bearish, one way or the other. Inside trading range day, still in this little zone of support, the little blue area that I drew in. And the head and shoulders is not supposed to be valid anymore. So I probably should delete the neckline, which I just did. And we'll see how this pans out. So it's confusing for me at the moment, but I'll be on the right track in a flash. Let's go to futures. Now, I like to look for a red or green bar today's trading price range. And we're not overbought or oversold for the 10-year, although it is coming down. That means rates are going up, at least bank to bank, short term. Same for the bond market, and not oversold quite yet either. Crude oil going up, possible double top, but it did make a new high. At the moment, it's barely lower on the day, so there's a possibility that there's a double top brewing. Not real sure about that, but I would certainly keep that in mind. Silver has 2 days of overbought condition and in a resistance area, so I'm looking for a pullback. That means a decline or a dip of some sort, short term. Gold has a three-prong bottom, or triple bottom, some people would say, and we have now made a slightly higher high than between the last two lows over the last couple of weeks. Looks like gold is trying to build a bottom. I'm a little bit friendly short term. I'm not particularly excited about anything at the moment here, but more base building might be needed, but I'm slightly friendly. The YM is the Dow Jones, and it has those two sell signals last week. Wheat, nothing going. Corn, nothing going. Platinum, bullish. Trend is up. Not overbought yet, so looks like it's going to make some new highs. Copper could settle back very slightly. In fact, today's little dip could have been it, and then start to work its way higher. We got a great buy signal on the bottom of copper back there on September 28th. A little overbought recently in soybeans, and it's now not overbought, so I'm expecting it to continue to go sideways, basically. Natural gas gapped up a little bit this morning. Gaps are almost always filled, so I'm going to see a little bit of a dip there. Otherwise, basically neutral. We have an outside trading range bar, an ER sell signal in soybean meal today. It is in progress. We have had an overbought condition within the last few days, and that was the high of the rally, October 31. It has been 5 days or less, so the outside bearish engulfing counts. We have an official ER sell signal if it stays down below the close of yesterday, Friday. If it closes higher than Friday's high, higher than Friday's close, or equal to Friday's close, then I have no sell signal. But it looks like it's going to stay lower, and that would be an official sell signal. And then I would expect a test of the lows of the whole move in the area of 396 to maybe through low 90s, 390s. Let me see what I've got on soybean oil. Overbought, and very much so. It's been overbought for several days. I'm looking at a downside reversal possibly in progress. I would be very close to selling short soybean oil. Same commentary for rough rice, rice, and oats, neutral and oats. Heating oil oversold yesterday, starting to come down today. Looks like it could have a minor correction here. Nothing on Miss Piggy. It's up quite a bit, but no signal per se. Overbought on OJ. Be careful about doing anything except for short selling. I'd also be interested in a short sale on cocoa. neutral on sugar, live cattle. We got overbought at the top a week or so ago, 2 weeks ago. And lastly, we got a buy signal a couple of days ago on coffee, but coffee's buy signal, well, it wasn't a buy signal. I apologize. It was just an overbought, very oversold, I meant, condition, which did produce a small rally. But now we've started to make lower lows. So it's still a bear trend, looking for lower levels on coffee. So that's it for the futures group. Forex. I'll go down this little list here. These are the most popular ones. DX. I'm looking at approximately 1 year of historical data. And the thing to do is to scan tops and bottoms for red and green. Bullish on the bottom. Buy signal smack dab on the bottom day. The high of this little rally, we got one there. The bottom of that break. And of course, more recently, the high on September 28th. It looks like we're going to have new lows soon. And that'll be a new low since that sell signal, which was a whopper so far. Next symbol is euro dollar, the EUR USD. I had a sell signal a couple of days ago, which failed, and I'm still looking at this good buy signal on September 28th. So I'm neutral to bullish. We got a good buy signal almost at the bottom here, buy signal at the bottom there, a good sell signal at the top there. US Japanese yen. Sell signal on top a couple of 3 weeks ago. That one did not work. That was a good sell signal, did not work. A good sell signal right there. Don't have much to go on the buy side though. Great British pound against the great US dollar. Buy signal almost at the bottom here. That implies the pound's going back up. And a great buy signal beginning of this rally. And an excellent sell signal way back in here. Some of these are not quite as good signals. It does not necessarily mean that you would not have been able to make some money on these signals, which look like they failed. It depends upon how the market moves after the signal and during, and how nimble you are. AU USD, Australian dollar against the US dollar. A buy signal on the low day. That's what we love, October 13th. A couple of complementary buy signals just a couple of days later, and we are almost a new high ground. And this could be the second highest close for the rally if it stays here. What about US dollar Canadian? Love it. Sell signal smack dab on top. That's pretty much it. We got a sell signal here. Didn't work out quite as expected. And that is not a good signal at all. And the Swiss franc, US dollar, Swiss franc. On the bottom, a buy signal. On the bottom of this break, a buy signal that didn't work all that well. Here we have an excellent buy signal on June 3rd. 1, 2, 3, 4, 5, 6, 7 days afterwards, we're going up every single day until it got overbought and turned down. That's a whopper of a buy signal. Every day it closed higher. A nice little short-term, a few days sell signal there. And lastly, we're going to go with Euro British. And we got a buy signal at the bottom, way back here. A fantastic March 7th. We have a good sell signal for a week or so here on May 12th. And that's about it. Let's go to sectors. These sectors contain individual stock symbols that make up the sector, like gold mining stocks in the gold mining sector or pharmaceuticals in the pharmaceutical sector, etc. We got a sell signal on the top day, November 22nd last year, and it has been the top ever since. We recently had a buy signal that's worked very well so far. It's a little bit in jeopardy now that the market's come down close to that signal. Also in ITB, on the very top, December 13th, turns into a double top formation. We had a sell signal on the bottom of the break before that top. We got a buy signal on October 6th Perfect. Bottom of a big break, beginning of a big rally. Those are the ones you love. Green on a big bottom and red on a sharp V top. Well, that's it. Thank you very much. You have a great day. Profitable trading to you. See you tomorrow, Tuesday.